Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Tuesday the 17th of September in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, traders' uncertainty about the size of a Fed cut hits its highest level since before the financial crisis.
Amazon CEO ends the firm's work-from-home policy as he vows to cut management jobs.
Plus, we head to Norway, where a weakening currency is upsetting a lot of people in one of the world's richest and priciest countries.
Let's start with a roundup of our top stories.
Bond traders are more divided about the outcome of this week's Federal Reserve meeting than any scheduled US central bank decision since 2007. Fed policymakers have all but guaranteed a first rate cut in more than 4 years. But with just 1 day to go, markets are showing a toss-up between a quarter point or half point reduction. Bill Dudley, a former president of the New York Fed and Bloomberg opinion columnist, is calling for 50.
Doing 25 would have been awkward because it would have disappointed market expectations. They probably would have shown only another 50 basis points in their summary economic projections. So the Fed would be essentially saying we're only going to do 75 basis points this year when the market was priced for about 120. So I think doing 50 brings the Fed more in alignment with the market, and it also fits the logic of the moment.
But not everyone agrees with Bill Dudley's assessment, including the CEO of PIMCO, Manny Roman.
Well, we're in the camp of 25, but I always say we have a crystal ball, and at the end of the day, we'll see what the market does. It may very well be that it doesn't make that much of a difference, and our view is that there will be 3 cuts of 25, and at the end of the day, what matters is where we are at the end of the year.
And PIMCO's Manny Roman isn't alone in his assessment. Apollo Global Management co-president Scott Kleinman has warned that investors are placing overly high expectations on the scale of Fed cuts in the coming year.
Now, more details are emerging about the suspect in the apparent assassination attempt on former President Donald Trump. The FBI says that Ryan Routh may have been in the area near Trump's golf course in Florida for about 12 hours before he was spotted. Meanwhile, Donald Trump has been looking to gain political momentum from the incident, claiming without evidence that his Democratic rival Kamala Harris's, quote, highly inflammatory rhetoric inspired the gunman. The comments were echoed by Trump's running mate, J.D. Vance, yesterday.
No one has tried to kill Kamala Harris in the last couple of months, and 2 people now have tried to kill Donald Trump in the last couple of months. I'd say that's pretty strong evidence that the left needs to tone down the rhetoric and needs to cut this crap out. Somebody's going to get hurt by it.
Despite the claims by J.D. Vance, Vice President Harris has condemned political violence after both attacks, saying that violence has no place in America.
Amazon has told staff they have to return to the office 5 days a week from January and announced plans to cut jobs in management. CEO Andy Jassy wrote in a memo to employees, "We want to operate like the world's largest startup." Many of its warehouse staff already work full-time in person, but the move will affect hundreds of thousands of office workers. Employees have fought the delivery giant's past efforts to end work from home, saying that Amazon failed to provide data showing in-person work achieved better results.
Intel is set to make a custom AI chip for Amazon, boosting turnaround efforts at that firm. According to a joint statement, Intel and Amazon Web Services will co-invest in a custom semiconductor in a, quote, multi-year, multi-billion-dollar framework. The announcement sparked a jump of more than 8% in Intel's shares in late trading. Bloomberg's Annabelle Drewler says the deal is significant for the company.
Getting AWS here is a real vote of confidence, particularly for that foundry business in particular, which of course makes it a contract manufacturer for semiconductors. But AWS is the largest provider of cloud computing. It has been using Intel processors at different points over the years, but now it's shifting more to in-house designs, and that's what it wants Intel to help build now.
Our tech reporter Annabelle Drewler speaking there. For Intel, the move could also potentially bring work to new plants under construction in the US. The firm is postponing new factories in Germany and Poland for 2 years, but remains committed to its US expansion in Arizona, New Mexico, Oregon and Ohio.
Emmanuel Macron is in talks to win a pivotal EU Commission job for France. Sources have told Bloomberg the plan would see outgoing Foreign Minister Stéphane Séjourné become an executive vice president overseeing the EU's efforts to boost competitiveness. His appointment would see Macron gain control over one of the region's most important issues, ensuring its industry and defence capabilities can keep up with countries like China and the United States. EU Commission President Ursula von der Leyen is expected to announce her appointments of the College of Commissioners today, with final approval still needed from the European Parliament.
Keir Starmer says he is looking to Italy's right-wing government for lessons on how to tackle migration. On a visit to Rome, he praised his counterpart Giorgia Meloni's asylum deal with Albania. Britain's Prime Minister told reporters he's being pragmatic.
Here there's been some quite dramatic reductions, so I want to understand how that came about. It looks as though that's down to the upstream work that's being done in some of the countries where people are coming from. I've long believed prevention and stopping people travelling in the first place is one of the best ways to deal with this particular issue.
Starmer's comments reflect a push to reassure voters who switched to anti-migration parties like the Reform Party in the last election. But the hard line may worry some on the left. Meloni's government has faced criticism from human rights groups.
The rapper and businessman Sean Combs, known as P. Diddy, has been arrested in New York. The charges against the US rapper have not been made public, but the star's legal team has called it an unjust prosecution to quote, reserve your judgment. In recent months, Combs has faced allegations of sexual assault and abuse. In a moment, we'll bring you more on how markets are thinking about the Fed rate decision, plus why Norway's oil capital is the best place to illustrate how inflation has affected the country. But first, a story from here in London as well. Another proposal to close Oxford Street to vehicle traffic. So our colleague Jennifer Creary has been writing about the Mayor of London reopening this debate with the backing of the Labour government this time. A previous attempt at pedestrianisation of Oxford Street failed in 2018. This is, of course, part of the efforts to try and drive more people back to Oxford Street. Numbers have been down since the pandemic. More people are shopping online. We've all seen the number of vacant shops on Oxford Street as well these days too. The street is still a retail hub. £3.1 billion in sales last year, according to the New West End Company, which is a group that supports businesses in the area. They're supporting this move. Think that'll draw you back to Oxford Street?
Well, there are two enormous malls now in London that are still fairly recent additions, aren't they, in the east and the west? So that's one issue for shoppers. I think the other one underlying this is the issue around London being such an old city, having small streets and only a few big arteries, one of them being Oxford Street. At the moment, buses can go down, but it's limited to sort of taxis, buses, and actually cars can't go down Oxford Street most of the time anyway. But I think that is the issue, isn't it? It's actually how you map a reduction of traffic across London and don't make it impossible to get anywhere.
To get from east to west, yeah, indeed. One to watch anyway to see if there's progress being made on that. Let's bring you more now, though, on how markets are gearing up for the Federal Reserve meeting, which begins today. Our executive editor for Asia Markets, Paul Dobson, is with us for more. Paul, traders the most uncertain they've been since 2007 over tomorrow's decision and whether or not we'll get a 25 or 50 basis point cut from the Fed. Why the uncertainty?
Yes, good morning, Stephen. Well, the one thing that they are all united on is the idea that the Federal Reserve is going to begin cutting interest rates this week. That much is at least boiled in or nailed on at that point. But the scale of that cut is what everybody is paying attention to. And there's two camps here. One that's thinking, the Federal Reserve still has some lingering doubts about the stickiness of inflation in the US, and it wants to ensure that policy is sufficiently restrictive to get that inflation properly under control and vanquished before it begins easing in earnest. On the other side of that, those who think that the Federal Reserve is likely to begin or is likely to be cutting this year in 50 basis point steps later on in any case think, why don't they just get on with it now? Why need to wait? The labour market is showing signs of weakness. Some of the rest of the data is pointing in that same direction, and the Fed risks getting behind the curve. So that's where those arguments are. I think, we've seen in recent days some of the former presidents of local Federal Reserves talking about their sort of calculation or the way that they would see it and the balance of risks. And they've been mostly leaning towards a 50 basis point cut, given that right now they see the risk of the economy slowing down in a quite nasty or worrying way being the bigger risk relative to the risk of inflation coming back up again.
In terms of the other data that we get today, US retail sales figures, how might that feed into market calculations? Is that the kind of data that people are watching?
With nothing else left, Caroline, I think that that's exactly what people are all going to be watching, just for one final piece of the puzzle, one way or the other. It's more likely probably to swing market positions than it is to swing the actual Fed policymakers. But the strength of the consumer is one of those things that's really endured all the way through this cycle, and in turn has led to a little bit more of that stickiness in the inflation picture. So if we see strong retail sales, that may well convince people that the Federal Reserve will only begin with a 25 basis point cut. On the other hand, if we get some weakness and the forecasts aren't that high overall, then that might convince more in the market that the Fed will be more aggressive with this first cut.
Paul, can we talk about how traders in Asia, where you are gearing up for this as well? Because we've also been watching, of course, the Japanese yen strengthening significantly, a little bit weaker on the day today, but strengthening significantly yesterday in particular, ahead of a Bank of Japan decision later this week as well. Where are the focus for traders in Asia?
Yeah, it's a great question. It's kind of split two ways. It all really depends on that weakness of the dollar and where other countries stand relative to that. So for Japan, which has a lot of exporters and is reliant on that, a much stronger yen against the dollar is a negative, and that's why you're seeing that weigh on the Japanese equity market so much. On the other hand, people that think that an easier Fed policy and a weaker dollar is going to broaden and spread risk demand further across the region are looking to pick up bargains. In particular, we've seen lots of strength in Southeast Asia in recent weeks, not just the equities, but also the currencies and the bonds all united in a big rally. So it depends whereabouts in Asia you're looking to see whether this is likely to be favorable or punishing for the markets there.
OK, Paul, thank you so much for being with us. Our executive editor for Asia Markets, Paul Dobson. Let's see where the FOMC meeting ends up tomorrow.
Let's turn to Norway now, where the krone is the worst performing G10 currency against the euro and the dollar this year. The weakness across recent years has made the surge in inflation more painful for Norwegians and has recently led to rare criticism of its central bank by the country's politicians. Our reporters went to look for effects of the weak currency at Stavanger, which is Norway's oil capital. Bloomberg's Ott Umalas joins us from Oslo for more this morning. Ott, good morning to you. Why is Stavanger the best place to tell this story?
Morning, Steve. Yes, as you said, Stavanger is Norway's oil capital, and it's the headquarters of Norway's biggest company, Equinor. Historically used to rely on shipping and shipbuilding and fish canning, but after oil was discovered in the North Sea at the end of the 60s, it turned from what was then a relatively poor industrial town into one of Norway's wealthiest areas. And in fact, at one point about a decade ago, before the oil price plunged, it was among the most expensive cities globally. So it has been one of the biggest contributors to Norwegian krona's strength over the years. And it made sense to go look for whether the krona woes are felt there as well, despite all the oil wealth.
OK, so what evidence did you find then of Norwegians suffering from the weakness of the krona?
Right. We did know from evidence that has been provided by the central bank that krona weakness already last year was a key factor behind the higher level of inflation compared to the euro area. And also we knew that it's boosting input costs for companies. And so in Stavanger, even with the backdrop that the lower level of krona is helping exports, there's still plenty of evidence that domestically oriented sectors like construction or retail are suffering. So some companies are laying off staff, some are closing their businesses because krona weakness is pushing up their costs, and higher prices are also damping demand. And what's perhaps even worse in the long term, foreign workers no longer want to come to Norway because it just doesn't pay. And Norway does depend on foreign labor, mainly from Eastern Europe in a number of sectors. So it really is hitting Norway and Stavanger on several fronts.
Is this situation likely to change, or are there any prospects for this dynamic to shift?
Most experts tend to explain it with several factors, both short-term and long-term. So short-term, that's mainly about differences in interest rates after Federal Reserve started raising the rates early in 2022. Followed by the ECB, and then those increases were made faster than the rate hikes delivered by Norway's central bank. And another factor is the heightened geopolitical uncertainty, which also weakened other smaller developed nation currencies. But then there are other factors behind the longer-term decline, which has lasted for about a decade now. So oil prices come down, and the krona still remains an oil-dependent currency. But also Norway's productivity growth hasn't been as good as most of its peers. And then some experts also point to a long-term outflow of savings.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.